Welcome everyone to the Vested Interest channel. This is Shane, and in this video we are going to take a look at S&P Global. No, this is not the S&P 500. This is S&P Global. They are a financial company out of the financial sector. They provide data analytics, credit ratings. We'll talk about that a little more here in a minute, but S&P Global, not the S&P 500. Now, this is the vested interest stock screener. This is the criteria we will be going through today. We will run through the stock screener at the end of the video, see if it meets 5 of 8. If it does meet 5 of 8, that means it makes it onto my watch list. Now, that does not necessarily mean I'm interested in buying. It just means out of the thousands of stocks out there, I am interested in doing more of a deep dive into the financials, looking at their balance sheet, their income statement, things like, are their margins expanding? Is their revenue growing? Are they paying down debt? Comparing them to other companies in similar veins. So this would kind of be like a company comparable to like a Moody's, for example, and then doing a discounted cash flow analysis, finding out a range I'm willing to pay for the company, and possibly adding them in the future if they meet another set of criteria that I have set up. And don't blindly follow me or anyone else, even if it does make it onto my watch list or if I am buying. You should be investing based on your criteria that you have set up for yourself, based on your timeline, what your goals are. So don't blindly follow me or anyone else on YouTube that you're watching. These should just be for informative purposes, maybe to give you some ideas of companies to look at. All right, back to S&P Global. Check them out on their homepage, www.spglobal.com. That's www.spglobal.com. That is their homepage where I pulled this information from. We are S&P Global. Essential intelligence is our central offering. It is the powerful combination of data, technology, and expertise. Our clients leverage it to view the world with greater clarity, make decisions with increased conviction, and take actions that lead to greater prosperity. And that's really what they are. They are a data analytics company providing credit ratings. They track they'll give you indices, index provider for benchmarks, various valuations. But let's read through this. So you've got the S&P Global Market Intelligence. That's one of the sectors. Our team of experts deliver leading data and technology solutions, partnering with customers to provide them with the unrivaled insights to expand their perspective, operate with confidence. So again, they're just providing a lot of technology around the market. S&P Global Ratings. So they'll give you ratings like credit ratings. Our analyst-driven credit ratings research and sustainable finance opinion provide critical insights that are essential to translating complexity into clarity so market participants can do a little better in the market. S&P Global Commodity Insights. With our unparalleled data and deep insights of global energy and commodity markets, we enable our customers to make decisions with conviction and create long-term sustainable wealth. And you can go to their homepage and click on each one of these and read more about them. S&P Dow Jones Indices, right? So that's one they track. We provide iconic and innovative index solutions backed by unparalleled expertise across the asset class spectrum by bringing transparency to the global capital markets. Again, they're empowering investors with information so they can make better decisions. S&P Global Mobility. We provide valuable insights derived from unmatched automotive data. So there's some information on different sectors that they cover. And really, like I said, they are an information provider, data analytics, credit ratings, that sort of thing. And they are providing it to large companies out there so that they can make better decisions around what they want to do as far as investment wise. All right. We are talking about S&P Global Inc., ticker SPGI, and the reason we are taking a look at them down 6.18% on the day, closed out the day at $510.45, 52-week range as low as $427.14, as high as $579.05. They are not quite within 15% of a 52-week low. They need to drop down to $491. Under $491.21, I believe is what it was. So really under $491 to be within that 15% of a 52-week low. Market cap of $155.84 billion, so a large cap company here. Beta of 1.2, so they are more volatile than the overall market. Might be able to use that volatility to your advantage, buying on the downturns, holding on those upswings. PE price to earnings ratios seems elevated on this one, $39.06, but Moody's does as well. So this may be just one of those companies where you have to pay a premium to get it. Again, people pay for data. That's just the nature of the game. And some people are willing to pay a lot of money for data if it gives them, or if they feel like it gives them a leg up and gets them, another 5-10% basis points on their investments, could be a significant return. Earnings per share, $13 per share. Earnings date, October 23rd, 2025. So coming up here in a little over a month now. For dividend, $3.84 per year. They are a quarterly payer. We'll see that here towards the end of the video. Starting dividend yield is low at 0.71%. Ex-dividend date, November 25th, so we are a few months away from that still, or a couple months away from that still. Actually, yeah, it looks like their last dividend was paid out in September 10th, right? So that would be the next ex-dividend date in November. 1-year target estimate, $621.90. So they do see it, at least according to Yahoo Finance, setting a new 52-week high. That is just their estimate, so take that with a grain of salt. Now, jumping over to the right, I like to look at dividend yield theory to see if the company is potentially undervalued. To do that, we look at their 5-year dividend yield average, 0.81%. We compare to the current, 0.71%. And since it is lower than their 5-year average, that actually speaks to potential overvaluation on this one, right? So this one, according to dividend yield theory, is potentially overvalued. Now, payout ratio, I like under 75%. They're sitting at 28.75%, so it doesn't look like they're in danger of a dividend cut. Have plenty of room to continue to maintain that dividend growth, that dividend payout, and hopefully raise that over time. Now, free cash flow, I want that growing over time because they can do some things with that free cash flow. They can hold some of it on the balance sheet as cash or cash equivalents, pay down debt, make acquisitions, reinvest back into the company, pay a dividend. This company does raise that dividend over time, pay down debt. We want a company to be able to do all of those things. And looking back here, December 2021, 3.5 billion in free cash flow. 2022 down to 2.5, but we're going to look at repurchase of shares here in a minute. 12/23 back up to 3.5 billion. 2024 up to 5.5 billion. Trailing 12 months at 5.4, but this does include part of 2024 numbers since we're only in September here. Looking at repurchase of shares, nothing in 2021, 12 billion in 2022. So even though it looks like there was a downturn in 2022, huge upswing in the repurchase of capital shares. Now that did go down in 2023. So I'm actually looking at maybe a really good year in 2022, back down in 2023, but then back up in 2024. So a bit of cyclicality there. Overall, 2024 was the same, 3.3 billion repurchased shares. Trailing 12 months looks like they are continuing that trend for a little over 4 billion. But again, we don't know how much of that is from 2024 numbers. So we'll have to wait and see. Jumping over to stockanalysis.com, this is another source I go to for information. I am not affiliated with either stockanalysis.com or Yahoo Finance, just one of the sources I go to, or two of the sources I go to. I do recommend 2, if not 3 sources, so you can make sure the information you are looking at is accurate and up to date. They do have 12 analysts that have taken a look at this. They call it a consensus buy. Low estimate of $589, and it currently sits lower than their lowest estimate. So that if it came back up, that would represent a 15.54% increase from where it currently sits. Average estimate $615.58, which is pretty close to that $620 that we saw with Yahoo Finance on the previous page, and that would represent a potential 20.75% increase. High estimate of $660, that would represent a potential 29.47% increase. You could collect that 0.7% dividend yield along the way. Now, I like to look at a little bit of statistics here. Return on capital employed and EPS growth. I like to look at as part of initial screener. Return on capital employed, I like above 10%. They're at 11.17%, so just above the 10% I'm looking for. EPS, earnings per share growth, I like above 5%. They're looking at 16.31% estimated over the next 5 years. Very nice. Revenue growth forecasted at 6.65%. Now, quarterly payers, we mentioned payout ratio relatively low, under 30%, 29.53. Dividend growth is not the greatest, but high single digits, 5.49%. 52 years of growth. Buyback yield is positive at 2.13%, so they are pulling more shares out of the market than they're issuing. Shareholder yield is positive at 2.85%. Now, they do pay like most companies on that March, June, September, December timeframe. Going back in time here to May 2023, they were paying 90 cents. Raised that up February 2024 up to 91 cents. Most recent raise, it looks like, was February 2025 up to 96 cents. And I would anticipate if they're going to maintain this dividend growth, their next payout raise will be February 2026. All right, let's run them through the screener here. Understand the business. Again, they are a data analytic company. They are providing data to investors, to businesses, so that they can make better informed market decisions. Growing free cash flow, nope. A little bit of up and down over the last 4 years. Growing dividend, yes. Dividend payout ratio is under 75%, yes. Dividend yield theory says they're actually potentially overvalued right now, so no check there. It is not within 15% of a 52-week low. Again, it needs to drop under $491.21, really $491 or lower. Return on capital employed was above 10%, so check there. Earnings per share growth was well over 5%, over 15% actually, forecasted over the next 5 years, so check there. So 1, 2, 3, 4, 5. It does just make it on my watch list. I believe this one is on my watch list already, along with Moody's. 2 companies I'd like to do more of a deep dive. Actually, I've got a couple companies I'm doing more of a deep dive right now, comparing them to Union Pacific to see if potentially, I know I'm buying Union Pacific lately, but if I find a better opportunity, Union Pacific is one that would be on the chopping block. One that I'm really looking at right now is Badger Meter. I really like the company, but I have not done a deep dive into the financials. That is on my list to do this weekend. I may do a video about that so that you can see how I'm looking at the company as far as a deeper dive into the financials and see if that one might be my next buy. So tune back in for that video if you're interested in that kind of content, and let me know what you think of S&P Global. Is it on your watch list? Is it on your buy list? Or maybe you were part of the reason for the downturn. Were you selling it today? Would love to hear from you in the comment section down below. All right, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like this you'd like me to cover in the Stock Pick of the Day series, drop it down there. I'll work it in through rotation on a day that it pulls back. Appreciate you watching to the end of the videos. Watch time is one of the metrics that the YouTube algorithm looks at. And hit all of those buttons down below, the thumbs up, the bell, all of that, so that you can help spread the word as well. Dividend growth investing is what we cover on this channel. Hopefully you enjoyed the video. And this is Shane signing off. Wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can't lose your money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor. Again, thank you for watching to the end. Really do appreciate it.